During the previous quarter, we had inflation continuing to trend way above the bank's upper limit of 6%. And despite this, the Monetary Policy Committee kept the bank rate unchanged as it saw that inflation was transitory. And then also on the monetary policy front, there were some changes that they effected. And this was done so that they could better transmit their monetary policy expectations better through the economy. So they had changed the bank rate to what is now called the monetary policy rate, which is going to be a rate that banks actually trade on, which will allow them to actually permeate whatever it is that decisions are taken throughout the economy. Because the previous rate was actually more of a theoretical rate, while this current one is actually more of a commercial rate that actually affects liquidity in the banking system. Coming quarters, in terms of inflation, we think that it's peaked. We think that it's now going to come down due to base effects, i.e. because inflation was high last year, another price increase does not affect the inflation numbers as it did before. That's the first. The second is we also expect GDP to moderate, i.e. come down a bit. And the main reason for this is the previous year was on the back of the 2020, where there was effectively the economy was shut. So we now see that there'll be a moderation now as the base effects again of the previous year had a very strong resurgence in economic activity. And then in terms of the bank rate, we do expect that there will be further increases in the interest rates, and the reason for this is inflation is still trending above the Bank of Botswana's objective range, and we expect it to actually get into that objective range in the first quarter of 2023.